This is Nightly Business Report with Tyler Matheson and Sue Herrera.
Flying high, stocks rally and rally big, turning positive for the year, despite a surprise warning from Intel that revenue in the first quarter will be almost $1 billion lighter than forecast.
Beat the market. Why most active fund managers have not been able to outperform their benchmarks over the past decade.
Pricing pressure. Could a new class of drugs cut the price of expensive medications nearly in half? All that and much more tonight on Nightly Business Report for Thursday, March 12th.
Good evening, everyone, and welcome. Wipe away your tears from the past couple of days. Wipe those losses away. More importantly, stocks are once again positive for the year, helped by a strong showing in financials, following the final results of the stress tests we told you about right here last night. Now, today's mixed economic data gave pause to the idea so prevalent over the past couple of days that the Federal Reserve will surely raise interest rates soon, maybe even in June. Well, by the close, the Dow Jones Industrial Average gained about 260 points today to finish at 17,895. The Nasdaq rose 43, and the S&P 500 tacked on 25 points. Stocks rallied despite a warning from the Dow component Intel. The chipmaker slashed about $1 billion from its first quarter revenue forecast, and that move surprised the street and investors. Intel, the worst performing stock in the blue chip Dow today, falling more than 4.5%. Josh Lipton now with more on why the chips are down at Intel.
Intel was the darling of the Dow last year, enjoying the biggest gain in the index. So far this year, it's a different story. One big reason, weaker than expected demand for personal computers in the workplace. That's a problem for Intel. The company controls the market for PC chips, which accounts for some 60% of its sales. So far in 2015, Intel stock is dramatically underperforming both the S&P 500 and the Nasdaq. Although the stock might now look more attractively valued, some analysts still aren't convinced it's a buy.
There's no doubt that the stock is looking more attractive now that it's come off its high. I mean, this stock topped out at over $37. Now with it trading closer to $31, I think people are might want to start kicking the tires. What I think will keep people away from jumping too quickly is we really don't have an update on how the company views the full year yet.
One tailwind for the PC market last year was Microsoft's decision to end support for its Windows XP operating system. That forced companies to buy new computers. But Intel said today that small and medium-sized businesses running PCs with that old operating system aren't upgrading their machines. And this afternoon, analysts at research firm IDC said that they expect PC shipments to fall by nearly 5% this year, a drop from the previous forecast. Despite these challenges, Intel still has its fans on the street. Bulls argue that when Microsoft releases Windows 10, the new version of its operating system, a lot more companies will buy new computers in the back half of the year. That would give a boost to Intel. Intel's other big business line is providing chips for servers, which accounts for about 20% of its sales. Analysts say that business looks strong. But Intel bulls are on the defensive, with the stock firmly in the red this year. Investors could have a much better sense of whether Intel is a buy when the company next reports earnings on April 14th. For Nightly Business Report, I'm Josh Lipton in Silicon Valley.
To the markets now, and you know, the chances of owning a fund that beats the market these days is very low. According to S&P's latest report on actively managed mutual funds, 86% of active fund managers failed to beat the benchmark last year. 82% failed over the past decade. So, Senior Director of Index Research at S&P Dow Jones Indices, joins us now with more. Welcome. It's nice to have you here. This is pretty much an index advocate's dream, these numbers.
Yes, what the data is telling us that it is very difficult to outperform the benchmark over a long-term investment horizon. And these are professional money managers with investment insight. If they can't beat the benchmark, what does that mean for an average investor?
What you looked at here, in different categories, whether it was international, small company, growth, value, et cetera, was the percentage of funds that beat their benchmarks in the 1, 5, and 10-year periods. Did anybody do it?
Well, if you look across the 9 U.S. style boxes, you see that none of the categories outperform the benchmark over short-term, near-term, medium-term, or longer-term horizon.
You know, it's often thought that perhaps with the return of volatility, that some of these actively managed funds will do a little bit better. But your research also showed that that's not the case.
That is not the case. If you go back to the last 2 periods where we saw heightened volatility and the financial stress in the markets, such as 2001 or 2008, if you look at those reports, you'll see that most of the managers did not beat the benchmarks.
Domestic equity funds, it says here, lagged considerably across all time frames. 77%, 81%, 77% underperforming. You know, the argument for active management, has often been a couple of things. Number one, that in small cap categories, that's where the active managers could show their stuff. In emerging or international markets, that's where they added value. Or in down markets, that's where they added value. Did you find that at all?
That is not the case according to our data. If you look at these so-called inefficient markets, such as small cap or emerging markets, you'll see that over 1, 3, 5, or 10-year horizon, the managers investing in those categories did not outperform the benchmarks.
So for the average investor who, as you mentioned earlier, doesn't have all of these, computer models and things at their disposal, it really sounds like that they should just do the index funds. Is that what this data is actually telling the average investor?
Well, if you're an average investor, or if you're a retiree, or someone about to retire and you're going to live on your income, or you need the capital preservation, you don't have the time horizon to recoup from the losses if you invest in active managers. So in that case, your best bet is to get market-like returns via low-cost alternative options.
Was this underperformance, attributable largely to the fact that index funds are much less expensive to own than actively managed funds, or it just couldn't explain it away?
Well, if you add back the cost, even then, right, to make them on the parity basis, they still underperform the benchmark. So it doesn't really move the dial at all.
Thank you very much for joining us.
Thank you.
With S&P Dow Jones Indices. Ty?
To the economy now, where the federal government's budget deficit for February fell slightly, $192 billion it came in at. The Treasury Department says that is a decline of 1% from the same period last year. For the entire budget year, which ends in September, the Congressional Budget Office forecasts a deficit that is slightly above that for 2014.
Are you feeling wealthier? Household net worth hit a record in the fourth quarter of last year, rising by $1.5 trillion to $83 trillion. According to the Federal Reserve, the gains were driven by stock market gains and rising home values, the biggest asset for most Americans. The increase in wealth was the largest since the final 3 months of 2013.
A positive sign for the job market. The number of Americans filing unemployment benefits fell more than forecast last week. According to the Labor Department, initial claims dropped 36,000 to 289,000. That was a 3-week low.
Retail sales unexpectedly fell for a third straight month in February. Harsh winter weather kept consumers home and out of the malls and out of the auto showrooms, too. Despite an improving labor market, the Commerce Department reports spending fell 0.6% last month. This number is watched very closely because consumer spending is one of the main drivers of economic growth.
Retailers also trying to gauge what type of impact the strengthening dollar will have on their bottom lines. And it's high-end companies that could be most affected. Courtney Reagan has more.
Since many retailers operate all over the world, a strong dollar hits in different ways, some positive and some negative. On the manufacturing side, American retailers that source goods overseas could see lower costs thanks to the dollar's strength. But a lot of those contracts are in dollars, so the retailers don't end up saving any money. Plus, retailers can still take a hit when selling those goods in markets with weaker currencies. On the sales side, it's more expensive for foreign tourists to buy merchandise in the U.S., impacting higher-end retailers more, leading to some recent cautions. Coach executives said the stronger dollar and international tourist trends will impact sales and costs, but not enough to alter annual guidance. Ralph Lauren executives say sales to tourists have been lower, especially those from Russia and the Middle East. Neiman Marcus CEO Karen Katz said while the business isn't dependent on international consumers, there is some slowdown in Brazilian shoppers in Florida, but not enough to make a measurable impact. Deckers, the maker of Uggs, says the biggest drag on sales in the most recent quarter was the drop-off in foreign tourism to flagship stores in New York, Las Vegas, San Francisco, and Hawaii. While some higher-end retailers are aware of the trends, KeyBank's Ed Yaruma thinks retailers haven't yet felt the full impact.
When we talk to consumers, particularly foreign tourists, they tend to plan their shopping trips a couple months in advance. And if you contemplate that currency is really weakened in January, we think it could begin to impact that tourist trade most significantly during the key summer months.
I just heard the other day that many of the Canadians who used to cross the border from Canada into Buffalo, let's say, from Toronto, have been way down. The numbers have been way down because people just can't afford anymore to do the shopping and do the traveling through the States. So as far as Canadians are concerned, we're not happy.
But there is a silver lining. The U.S. consumer is widely considered to be in a position of strength right now. And Associated Bank SVP and investment officer Sarah Walker says American consumers who earn and buy in dollars will be a significant offset to a drop in tourist spending. For Nightly Business Report, I'm Courtney Reagan.
Still ahead, the FDA recently cleared the way for a new class of drugs, and it could potentially lead to cheaper, life-saving medicine. A new class of drugs could do something that hasn't been done in a while: cut the price of expensive medications nearly in half. That's what an executive at CVS Health told Reuters. He was referring to the entry of copycat biotech drugs into the market of so-called biosimilars. Meg Terrell has more on these medications and why they may have the potential to alter drug pricing.
It was a landmark for the drug industry. Last week, the first medicine known as a biosimilar was approved in the United States. Biosimilars are generic copies of biologic drugs made with living cells. Often given by injection or infusion, they treat diseases from cancer to rheumatoid arthritis. The industry calls them biosimilars because it argues the manufacturing process is so complicated, the products aren't identical.
The difference between generic and biosimilar is that generics are typically replicas of small molecules. Those can be accurately replicated by any company, and therefore the drugs are essentially the same. Biological drugs are quite complex. They involve thousands of molecules, and they're made by living organisms as opposed to synthesized in the lab. As a result, every time you make those large biological drugs, they're slightly different.
The medicine that was approved is made by Sandoz, a unit of Swiss drug maker Novartis. Called Zarxio, it's a version of Amgen's Neupogen, used to support the immune system during chemotherapy. Even though it was approved, it's not yet on the market. Amgen and Novartis are stuck in a legal battle that'll play out over the next few months. One of the biggest questions about biosimilars is their price. Typical generic medicines, like substitutes for the anxiety pill Xanax, can have discounts of up to 98%. Because biosimilars require more complex development and manufacturing, analysts and investors have estimated they'll come at smaller discounts.
Our take is that biosimilar will end up being priced anywhere between 40% discount to 80 and 90% discount versus the innovative drug that they are replicating. This is somewhat controversial. Other people think that discount will be a lot lower, like 20 or 30%.
Zarxio may save the U.S. healthcare system $5.5 billion over the next decade, according to estimates from pharmacy benefits manager Express Scripts. That assumes a discount of 30% off the price of the branded drug, about $3,500 for 30 days, Express Scripts says. Overall, it estimates biosimilars could save the U.S. healthcare system $250 billion in the next 10 years. So what does this mean for the drug industry? Increased competition to some of their biggest products will weigh on revenues. Citigroup estimates an 80% reduction in sales of Amgen's Neulasta once biosimilars hit the market. But Amgen's in the biosimilars game itself, planning to bring as many as 5 of the copycat drugs to market by 2019. Pfizer, Hospira, and Biogen Idec are all working in this space as well. For Nightly Business Report, I'm Meg Terrell.
Lumber Liquidators fights back against claims about the safety of its products, and that is where we begin tonight's market focus. The flooring retailer on the offensive in response to a report on CBS's 60 Minutes a couple of weeks ago that alleged that some of the company's flooring products contain higher than accepted levels of a known carcinogen, formaldehyde. On an investor call today, the flooring retailer disputed the charge, saying it is confident its products are safe.
Our goal today is to reassure our customers and investors that we are indeed the company you can put your faith in, and that you can continue to trust Lumber Liquidators to deliver a safe product to our customers.
Shares popped more than 10% today to 36.08. United Technologies exploring strategic options for its Sikorsky helicopter unit. That's the one that makes the iconic Black Hawk for the U.S. military. The CEO saying the spinoff will help the company grow.
Sikorsky is a great helicopter business. As we think about the portfolio, though, it's really a question of how do you position yourself for above GDP growth, for higher margin into the future. And we're looking at the next 10 years. And while it's a difficult decision to spin off Sikorsky, the fact is we think it's the right thing to do because it creates value.
Shares there were up about 2.5% today to 121.24. Vail Results saw earnings rise 95% on stronger revenue thanks to growth in season pass sales and spending by skiers. The company did lower the upper end of its full-year forecast for earnings, but investors played right past that. The stock surged almost 10% to 93.27.
Hovnanian sales rose in its most recent quarter, but the home builder's loss widened, and it said margins continue to decline. The company is optimistic about the spring selling season, saying its margins will improve if the housing market continues to strengthen. The stock was more than 2% higher to $3.48. Dollar General matching earnings estimates today, though its sales did miss. It initiated a dividend of 22 cents a share. The discount retailer says it also plans to spend more on labor this year as chains like Walmart have hiked wages. Shares were about 4% to the upside to 74.28. And investors got their chance to react to Box's first earnings report since going public, and it was not pretty. The cloud storage provider reported a wider than expected loss on higher operating expenses. The CEO is disputing the estimate calculation, saying analysts made an error.
We obviously want to make sure that we set appropriate expectations and that our communication is well aligned with the market. For the most part, we're just focused on execution. We had, again, a great quarter behind us. We have a lot of growth going on this year. And so our number one focus right now is absolutely on execution on the business.
Well, nonetheless, the shares tumbled 11% to $18.20.
BMW reported higher earnings and sales. The German car maker posted a 9% rise in net profit. It plans to propose increasing its dividend to shareholders. BMW forecasts an increase in sales volume this year with the help of 15 new models. BMW shares trade in Frankfurt.
German automaker Volkswagen is already the world's second largest automaker and is expected to pass Toyota this year to become #1 in the world. Today at its annual meeting, Volkswagen said growth is good, but it needs to improve in one major market where it struggles, the U.S. Phil LeBeau has more from Berlin.
Dr. Martin Winterkorn has good reason to smile. As CEO of Volkswagen, he's grown annual sales to more than 10 million vehicles and has positioned VW to pass Toyota for #1 worldwide.
I don't know whether we'll surpass Toyota this year, but we try to also achieve our other targets.
Those targets include boosting profit margins after spending billions to expand assembly lines worldwide, including in the U.S., where sales have lagged, in part because the company has been slow to build and sell SUVs.
Yes, we did procrastinate and wait too long. Of course, near Smallland, we had to close a Volkswagen factory, so we were reticent, and now we are going into the offensive in the States.
VW's plant in Tennessee will start building a new SUV with more to follow. Meanwhile, its biggest luxury brand, Audi, is cashing in on America's growing demand for high-end cars.
Audi's got a tremendous amount of momentum and they're expanding their portfolio, but it really comes down to capacity. And their capacity really doesn't expand until 2017 when they open up their new Mexican facility.
If Volkswagen is able to finally reach its potential in the United States, it could be poised for an extended run as the world's largest automaker, a title it could capture for the first time in 2015. Phil LeBeau, Nightly Business Report, Berlin, Germany.
Coming up, the big push by private companies to one day make big money exploring the final frontier.
Two landmark lawsuits against ride-sharing companies Uber and Lyft will go to a jury. That was the decision of two judges, and it updates a story that we first told you about just a few weeks ago. Those lawsuits allege that workers for the companies should be considered employees rather than contractors and are therefore owed certain benefits and protections. Well, if the jury finds the drivers are employees, it could change the business model of both Uber and Lyft.
Now to the race to develop space. Big investments being made by both private companies and individuals to commercialize the so-called final frontier. And today in Las Vegas, Jane Wells got a look at the latest project that will soon make its way to the International Space Station.
It's one small step for space, one giant leap for private enterprise.
This is a tremendous accomplishment for Bob and his team.
Las Vegas-based Bigelow Aerospace is sending this package to the space station. Inside is the beam, which will expand in under 5 minutes into a living area, which NASA will test for safety and durability.
What we'll be interested in is how it expands. Does it expand in the longitudinal direction? Does it expand in the circumferential direction? As it expands, does it impart any loads back into the space station?
Real estate magnate Robert Bigelow has spent $275 million of his own fortune to test the concept of expandable habitats in space, and NASA has paid $18 million for Beam to be launched later this year and attached to the space station, as seen in this animation. Such inflatable craft could eventually replace the space station, but can it withstand the rigors of space?
These systems are extremely reliable. The safest thing that mankind could be in today by far.
Former NASA astronaut George Zamka now works for Bigelow and says the beam's skin is stronger than any spacecraft ever.
The layer itself, people think, well, how sturdy can it be? It's actually like a steel-belted tire, except for the material that's in there is stronger than steel.
But Bigelow has big plans. He wants to build housing large enough for several astronauts and eventually replace the space station with them, and maybe even in a decade have habitats for the moon. Other entrepreneurs are working on rockets and lunar landers, but here's the problem. There's no system of property rights for the moon so that someone who spends the money to get there can reap the rewards. The FAA has decided it will restrict any future lunar launch licenses so that two American companies don't go to the same place on the moon. And Bigelow says that's a start.
The next step is probably to create a definition of what is this boundary? When are you sufficiently safe with the assets of people, of human beings, and other facilities? What is the standoff distance?
The Final Frontier has a changing business plan, and George Zamka hopes to get back to space again, this time as a commercial astronaut. How's the pay?
The pay? Well, it's different. It's not marine pay.
But he says the potential is astronomical. For Nightly Business Report, Jane Wells, Las Vegas.
And here's what to watch tomorrow. On the economic front, producer prices for February will be released before the opening bell. Consensus is for a rise of 0.3%. And we'll also get a report on consumer sentiment for March. And that does it for Nightly Business Report tonight. I'm Sue Herrera, and we want to remind you this is the time of year your public television station seeks your support.
I'm just going to call it TV station. Tyler Mathisen here. On behalf of your public TV station, thank you for your support. We'll see you tomorrow.